In this video today, I'm going to break down exactly how I analyze gold from the daily time frame all the way down to the 15-minute chart and how I build a clear market story before taking any trade. A lot of traders jump straight into the 5-minute chart or the 15-minute chart as soon as they get to the desk looking for entries. That's one of the biggest mistakes that you can make. If you don't understand the bigger picture first, you're trading without context. So everything starts with the daily time frame. The first thing I'm looking at when I come to the desk is how the previous daily candle closed. Did it close bullish or did it close bearish, or was it indecisive? This gives me my first clue about what price could potentially do for this trading day. For example, if the previous daily candle closed strong bearish below a key range, that tells me there's a higher probability price will want to continue driving lower. If it's closed bullish, let's say, naturally I'm going to look for bullish continuation unless price shows me otherwise on the lower time frames. And once I've looked at the previous close, I mark my key daily support and resistance levels, or at least have them in the back of my mind. And I'm looking for the nearest valid levels, not just drawing random lines on the chart. I want clean levels where price has clearly reacted off before. So you look left to get right. Then I look at the range between those levels. Now, this is important. I'm always asking, do we have clean range for price to move in? Or is there choppy price action in the way? Clean range is what gives us smoother movements. That's when we can expect price to move best. Choppy ranges create hesitation and fake outs. After the daily, I then drop to the 4-hour time frame. Now, this is where I get my session bias. The 4-hour kind of helps refine that directional bias, and the daily gives me the overall story for the day, the whole day, every session. The 4-hour tells me what could happen over the next few hours during that specific session. So let's say I get to London. Here I'm going to look at how the current 4-hour candle is forming. Is it building a top wick? Has the candle just opened? Is it making a bottom wick? Is it rejecting resistance? Where is it? Has it tapped a level, or is it moving to a level? These are all things we have to have in the back of our mind. This gives us deeper insight into where price could actually be heading. Then I mark my nearest 4-hour support and resistance. Again, looking for them clean ranges. The cleaner the range, the better the opportunity, as we've already discussed. And after that, that's when I begin to move down to the lower time frame. So now I'm on the 1-hour. This is where things start to become a little bit more precise. This 1-hour helps me understand whether lower time frames are starting to align with the higher time frame story / directional bias. So I'm checking, are we respecting key levels? Are we breaking structure? Are candles closing with strength? Or do we have rejection wicks, for example? This is where I begin building confidence in the actual direction I'm going to take my trade. Then I drop to the 30-minute time frame. So 15:30 is where we typically take entries. And this is where I refine my zones even more. I'm looking for breakouts, closures, consolidations, and whether price is preparing to move into a clean range, which we can trade in. The 30-minute gives me stronger confirmation before execution. And finally, then I'll move to the 15-minute chart, again, drawing those levels. And this is where I can execute. 15:30, typically where we execute. And by this point, I already know kind of the whole story. What the daily bias is, what the 4 hours doing, heading to target or tap target, where my key levels are, what range price has available. Is it clean? Is it choppy? Now I'm simply waiting for my playbook setup to talk about in another video. Could be a breakout, could be a celery, inverted celery, an onion. I need a confirmation candle before I trade it, a wick fill, a clean closure above or range below, or it has to fit my specific rules. And this is the key. I'm never ever guessing. I'm not forcing. I'm patiently waiting for all time frames to align and tell the same story. If they don't, then no trade. For example, if the daily is bearish, the 4-hour is bearish, the 1-hour breaks support, and let's say the 30-minute confirms with one of our setups, and the 15-minute gives entry confirmation, well, there we go. That's a high probability trade that I'm willing to lose on. That's what top-down analysis is all about. You're building the story from the top and refining it as you go down. Building the chapter of the whole book, not just the whole book to begin with. The market is always telling a story. Most traders lose because they only read one chapter. You need to read the entire book. That's how you find cleaner setups, better entries and more consistent results, which is what we're all after. So that's it for today's video. Look forward to see you in the next one.